Hey guys, just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's see what we have today. First, a quick recap of what happened and what played out. I'll go over just the last examples for now. In this range, we had a few bigger trades. Mainly, the last bigger ones were from this area here, where I opened several trades based on different statistics and price hitting a support level. That was my zone to look for longs, and of course, my invalidation was much lower. I remember saying at that time the invalidation would be a weekly close below that level, and I remember it because that's what I wrote in my journal. So always keep your journal updated. Anyway, we had an SR level between this weekly SR zone. That was the POI back then. Price then rose, hit some partial take profits, and reversed to form a higher low. At that point, there were still statistics that hadn't yet played out, mainly the fact that we hadn't seen a new all-time high yet. So there was another long trade opportunity from that area toward new highs. At the same time, a bearish setup started forming, which I mentioned several times before. It was mainly the EMA cross target, and I said, back then, it's a moving target that can be hit later, and that's exactly what happened. Price first moved up, hit more take profits near the highs, and then started showing signs of continuation weakness. However, we still had that bearish EMA target below, and I said multiple times those two setups, the bullish and bearish one, had never appeared together before. While I wasn't ignoring the bearish target, it was clear to me that it would only be hit if the support level broke. Until then, I was just trading the higher lows. That was the plan for retracements. But as we saw, this wasn't a usual retrace. And yes, I had a small loss on the way down. Everything was updated. Anyway, price hit the bearish target and the weekly order block, and that's exactly what I'll mark in my journal for next time. If I ever see a strong bullish setup and a bearish EMA target flashing together again, I'll know what can happen. Okay, next, what happened after that? Price went down, hit the bearish target, and the weekly OB. Down there, I added to an older existing long and got a few more fills from the last two higher lows. But as price rose again, I decided to close them. Obviously because after such a drop and leaving behind a big wick, there was a high chance of filling that wick. In that case, I didn't want to sit in the longs and preferred to open new ones lower. So I closed the rest of the runners and hedged short on the rise. Then we got a move down from there. I took partial profits on the short and later opened a small long day trade that hit TP1 on the bounce. Price then went lower again, filled a large part of the wick, and was also hitting the weekly order block once more, this time on a Friday. And that's when I took the next long. I got a few more fills there as I updated, and this trade hit TP1 yesterday. The thought process behind that trade: I think we are forming a range now. So I've been trading the shorts from the top and the longs from the range lows. The drop hit some bearish targets, so those played out. Bearish sentiment is now strong as price hit the support level. But based on the monthly stats, that was one of the few statistical facts that gave a strong confluence for a higher low. The average day for the monthly low was reached right on that drop. That means, on average, that's where we tend to see a low forming. When price reaches that level, and you trade based on statistics or use them as confluence, and it's close to invalidation, that's the best price for an entry in terms of risk to reward. That was one of the reasons. So, price filled the wick, hit the weekly support level, lined up with the monthly low day statistics. That gave me enough confluence for a trade. Even if it got swept, I didn't want to see any new closing candles below, so my invalidation wasn't local, of course. Another key factor, the FOMC statistics. I showed that usually we see a reversal before or at the FOMC event, and quite often we get a reaction even before that. The FOMC date fell on a Saturday, so since that was a weekend, I expected there could be a low forming on Friday before it. That was another reason to open the trade. On lower timeframes, price was already below the average loss for the day and was hitting the high to low average range. On the same day, price also hit the cycle time level on the daily time frame. At that moment, there was no confirmed buy signal yet, but given all the confluences, I decided to take the trade. And on Saturday, we got the buy signal confirmed on the daily chart. That's where I averaged into the position, and that's basically the small recap for now. Now, let's see what we have locally. The next thing to watch is the 7-day time frame, and the EMA crosses over the next few candle closes. It closes in one day, and if it closes like this, there will obviously be no cross yet. But once it happens, I can start looking for the lower target again. That's only if the support level doesn't hold. For now, that target is around 98K, but it's not confirmed. This target will rise with every new 7-day close. So even if the cross happens, we'll need to watch where price and target align at that time. Until then, it's just something to keep an eye on over the next few days. The pre-FOMC reversal seems to be playing out now. The next thing will be to see what happens on the FOMC date itself next week, so no need to focus on it yet. On the daily cycle, we had a buy signal, which usually appears near or at major lows. Yes, sometimes price grinds a bit lower afterward, but even then, there's usually a bounce, which we can already see forming now. If we track this signal through the current bull run, we can see it triggered at every major low. There aren't many of them. It's a rare signal, so it's worth paying attention. Of course, they can appear in bear markets too, but for now, there's no bear market confirmed, so I'll only look at what happened during bull market phases. Zooming in, we can see there are usually 4 to 5 daily buy signals before price continues higher. This year, we've already had a few low-probability events that played out, so the question now is, could this be another one, meaning that this single buy signal marks the low? Or, as in all previous cases, will we get at least 4 to 5 buy signals before continuation? If we take 4 as the base, allowing a deviation of 1 up or down, we could say 3 to 5 signals total. If that repeats, it means price could range here for some time, maybe revisit this level, stay flat, or make slightly new lows, but likely print more buy signals before the next major move up. That's what I'll be tracking now. Of course, just because something hasn't happened yet doesn't mean it never will. But until price actually makes a new high with only one buy signal, it's something that hasn't occurred before. So I'm not expecting that until it's confirmed, and I'll adjust my stats if it happens. Until then, I'll go with the historical fact that it usually takes more than one signal, meaning a possible range and retest of the level again. Yes, we're coming into a critical time where the market is running out of time to extend this bull leg. If it wants to bring in something new or rare, now would be the time, but I won't bet against the higher probability scenario yet. That doesn't mean we can't trade the longs or play the range, but it's something to keep in mind for the broader outlook. Okay, now let's look at the daily averages and the local range. Okay, based on the averages, we can see that price is already hitting the average range for the day. Usually, when that happens, I don't expect much more movement afterward. Yes, it can break above. That happens here and there, and on very impulsive days, it's possible. But, as always, price tends to trade within the daily average, so I don't expect it to break out every day. That means for now, most likely, I'll just watch for signs of weakness, and if I see any, I'll take partial profits on the trade. By the way, for those who are using the price action statistics, I've just updated mine, so please check if your numbers match as well. For now, since it's Monday, here's what the stats show. Mondays tend to close positive about 59% of the time across the entire bull run. The average move on a Monday is around plus 2.43% based on the close. That means wicks can extend beyond the average, but usually the close lands near the mean on normal days. So, if today closes green and we don't see a strong rejection, and at the same time price hits a resistance area, then it could be a spot to either take profits on longs or maybe look for a scalp short depending on structure. For now though, I don't have any valid short setup yet. That can change later, but for the moment, I prefer to wait. If there's no setup today, the better plan would be to wait for Tuesday, because by then we'll have a Monday range formed. And once that's established, we can use it to build our next day trade plan and even form a potential outlook for the rest of the week. Anyway, if a short setup does appear, I'd like to see a Monday range completed, a sweep setup the next day, SFP, ideally into a resistance level, and signs of local structural weakness. Until then, any small rise is just a chance to take profits, not to chase new trades. On the weekly linear chart, we can see that for now, price has made a higher low compared to the previous one. Yes, the move itself went lower, but on a closing basis, it's still a higher low. Another thing worth noting is that the local run-up ended looking like a three-wave move. Usually, price doesn't end a move upward with just three waves unless it's forming some kind of larger pattern, like a correction or a distribution structure. And yes, to be fair, it does look like a peak on the linear chart, but when we drop down to the lower time frames, we can see it's actually a poor high, meaning it hasn't been properly cleaned or confirmed yet. That kind of structure hasn't really happened before in this form. So from a structure point of view, and based on closing data, we still have a higher low, and there's no bearish confirmation for now. Well, besides this, there's not much more to update for now. Structurally and statistically, there's still no confirmed top at this point. So for now, I'm simply trading the range while staying aware of a possible revisit of the daily cycle level. The next important timing window for that would be this Friday, October 24th, followed by the FOMC event next week. So at that time, I'll mainly watch where price stands. If we keep ranging and potentially retrace back to the daily cycle level around the lunar cycle window, or somewhere between the lunar and FOMC dates, that's where I'll start looking for a new setup. If, however, price breaks out before that, then I'll be looking for a higher low formation, and ideally for price to hold the SR level as support, similar to what we looked for last time before the drop happened. Until then, it's all about playing the range. It could easily form a slow, choppy move down into that time window, and that would line up nicely with the daily cycle level and the timing confluence. But locally, I don't have any trade set up right now. I'd at least want to see price take the highs on the left and then show clear weakness. That's where I'd look for a potential short or simply let my existing short run. Alternatively, I'd wait for a Monday range to form to plan the next day trade setup. So the point is, I don't need to be in a leverage trade every day. I prefer to wait for high confluence setups, the ones that actually fit into my plan. Now, looking at my rabbit box strategy, we can see that I'm already in a few spot trades since it triggered entries across multiple time frames, 30 min, 1 hour, and 6 hour. I had capital prepared for each of those, specifically for spot positions. And the reason is simple. Spot trading keeps me stress-free. No liquidation worries, no rushing. I just average into positions as price moves lower, and I have a clear historical target with an extremely high probability of being hit. In fact, it has shown a 100% hit rate across all time frames in Bitcoin's history when traded on spot. It's all about patience, waiting for the target to be hit, and that's exactly what I'm doing. If you want to trade it as well, you can get access by joining Patreon. I used to offer the strategy separately, but now I decided to include it for free for all members who stay in the group, because I want people to be able to make some profit while they learn. So it's now included in the normal membership package. And that's where I'll wrap it up for today. To summarize, local trades are still playing out. I'm waiting for the next key levels to be hit and watching for the next timing windows around the 24th and the FOMC event next week. This last one already worked out quite nicely. So watch out for resistance zones and take profits there. Or, if you plan to short, wait for clear weakness confirmation. For me, I'll need a bit more before taking a short, so not yet. If price comes back down again, that's where I'll be looking for another long setup. With that said, I wish you all a great day, and I'll see you in the next one.